My name is Sundar Vaidyanathan. I'm a co-founder and the managing partner for Carson Solutions. And we do enterprise modernization and solution services for federal government. Now with that, I'll hand it over to Carroll.
Okay. I am Carroll Thomas. I'm the Associate Administrator for the Small Business Development Centers that are part of the U.S. Small Business Administration.
Hi, I'm Susan Truslow. I work for the Office of Federal Procurement Policy within OMB. My major focus is small business contracting issues, so anything in FAR Part 19 you can talk to me about.
And good morning. I am Desmond Brown. I am the Small Business Director for the Office of Personnel Management, and I am the self-professed Hollywood agent for small businesses.
It's okay. Thank you, everyone. Okay. So without further delay, let's jump into the topic. So the first one is the Affordable Care Act. And so before I ask Carroll to run through the presentation, I really request you to go to the poll site and answer the question in terms of how many are you really familiar with the details of the Affordable Care Act. I know it's all coming. We all know that it's going to come. But how many of you know the details around that act? And so keep the answer going, okay? Keep plugging in. And while Carroll is going to take the stage and walk us through the details on that act and also the implications of that act to small business. And we also talk about what can we do in preparation to deal with that act, okay? Carroll, take it.
Thanks, Sundar. I'm going to take it from the perspective of a small business because I used to be a small business owner back in the 80s, and so if I'd seen this back then, I know the kinds of questions I would have. So I'm going to kind of try to go from your perspective, even though I am the program manager in the Small Business Development Centers. So, and there's a lot to this information that you'll need to get.
Do you want me to zip it through? I'll do it.
Okay. Okay. I know for a fact, as a former small business owner, but even still today, affordable health care for employees has always been a very, very important area. And the reason is because it's so expensive and it's very hard to get when you don't have a lot of employees and you don't, you're trying to get people in. You have maybe a lot of part-time people. You have folks that are on contract to you, and so you'd like to get the best and keep the best. And one of the advantages in your small business of getting good employees is providing health care. This, the Affordable Care Act is, can be complicated, but there are two main areas that I feel, actually three main areas that I feel that you really should concentrate on. And we're going to go through those pretty quickly this morning. You have a handout there. There also will be an electronic file of that available that has a lot of embedded URLs that you can go to with further information. The three main areas that are most impactful for the small businesses are tax credits, and there are the health insurance marketplace, and then whether or not you'll be required in the employer shared responsibility area. And so what's really important with the tax credits are, where you are in terms of size. And ladies, we know size matters, but it also matters for gentlemen too in this instance. Most important, if you have a business that's under 10 employees, full-time employees, and I'll get to the definition of what is full-time employees a little bit further, but if you're under 10, there are certain tax credits and certain things that will apply to you. If you're between 11 and 24, which my business was, about 15 full-time employees, that would be most important for you to understand. And if you're 50 or above, that is another area that's very important to you. Thanks. And I'm going to start with the self-employed, the sole proprietorships, the folks that, they're usually healthcare, doctors, lawyers, different kinds of professions where you are sole proprietorship. which there are approximately 28 million small businesses in the U.S., and 9 million of them approximately are sole proprietorships. So this is an important area for those who are on their own. Starting in 2004, there's going to be sort of an individual shared responsibility. Some of you may have already completed your taxes for this year or should be about to file them very soon. You may have received, if you went to H&R Block or one of the other independent tax preparers, received something that said this is your payment, or this would be your individual shared responsibility amount. What happens is they're just kind of getting you aware of that this year, but next year in 2014, as an individual, even if you're not employed or have a sole proprietorship, you will have an individual shared responsibility provision that you will be required to get a minimum essential health coverage for, and that you will either have to show that you have this, or you will have a responsibility for paying in your income tax return for this provision of not having health care. So you can get it on your own if you work for another, for a small business, or as a small business owner, you need to have it for yourself, and we'll go into for your employees later. So there's a minimum essential coverage that you as a sole proprietorship will need to have. You will be able to go through the, it's called SHOP, which is a small business health options program that you'll be able to look through and find where, the type of health care insurance you would like to get. And so the advantages of, having this program and being a sole proprietorship is that you will, and I'm not a tax person, so I'm just letting you know right up front, you may be able to qualify for individual premium tax credit on your return.
So thank you. So a quick question on that. So there is a mandate for having a health insurance for any size, right?
Right.
That is it. And you're going to get tax credit depending on the size.
Depending
that you're
on the
gonna,
size, right.
Okay. And the option to avail the medical, the health insurance, either you could go through a private or you can go through exchanges.
Right.
Now, that's what you're going to talk about.
Yes,
Okay.
exactly. There is exemption. I don't have the information how you can be exempt from that, but everyone will be required to have some type of health insurance. And so, as I said, the 3 areas, we're going to start with the health care tax credit. Thanks. And so we'll start with the lowest. If you have a company that has less than 10 people, and then the average wages for your employees in there is under $50,000, and then you as an employer are paying 50% or more, contributing 50% or more towards the premium for those employers, there are tax credits, not deductions, but tax credits that are available to you. The more you contribute, and the smaller your company, and the lower the average wage, the higher the credit will be. So if you have a business where you're maybe cleaning carpets or what have you, and you have a few full-time employees, you may have about 10 employees, but 5 of them are part-time and the other half are part-time, and they come up to 5 employees total full-time, then you would fit into this area, which is the area that would receive the maximum tax credits under the Affordable Care Act.
Okay.
If you have employees totaling full-time between 11 and 24, you still may qualify for the tax credits, the federal tax, and I'm talking federal tax credits. We can also get into some state tax credits later, but you still may qualify with 11 to 24. The difference being that and it's sort of a sliding scale. The difference is every employee, full-time employee or equivalent that you have over 10, the credit sort of goes down. And then the number over 10, if they're over 25,000 in average wages, again, the sliding scale for the credit will go down. And I know this will seem complicated, but once you get into it, and understand where you fit in terms of the size of your company, it will all start to come together a little bit better.
Yeah, and I'd like to add to that. I think most of the small business that I have interacted with, I think the average wage is a little bit higher than 50,000, and they already have a good healthcare insurance.
Right.
And so I think I don't see major impact, but I think the benefit is going to be when you are very small. The average wage is also small. You're going to reap the best
Right.
benefit from this act.
Exactly. Especially if if you're an IT company and you're just starting out and you have 2 or 3 employees, and you know you're going to grow. And so here's a way to do that and get affordable health care for your employees. Okay, next. So with the health care tax, the amount, the credit is, actually it's been going since 2010 to 2013, and you can still get the credit if you've been doing it during this period, is up to 35%. And you need to talk to your tax preparer in order to find out exactly what that is. But what you can do is, when you speak to your tax preparer, ask them, to make sure that they have included any, looking through your possible tax credits for the Affordable Care Act. Starting in 2014, starting January 1st, that credit will go up as high as 50%. Now, with that, there will be, starting in October, there will be that marketplace of different healthcare programs that you'll be able to go through, and using that in that marketplace, you will be able to be eligible for the credit up to 50% of what you are paying in terms of premiums for the employees that you're paying for. And then the credit can be claimed for up to 2 years.
Okay.
And note, as I said before, that we're talking about federal tax credits right now. Your state may have additional ones, so you want to look into both your state as well as the federal. So, trying to make this succinctly, you're going to look at the number of full-time employees, particularly if you have less than 25 employees. You're going to look at the average wages of those employees and how much you're paying in terms of their premium, because that's what's going to give you what your percentage in tax credit will be. For 2013, it's up to 35%. 2014 will go as high as 50%. With the 2014, though, you will be required to get the health care provider through that marketplace, which I'm about to talk about. And so businesses between 25 and 49, which I didn't really get into a whole lot, they won't be eligible for the tax credits at the federal level, but again, they may be eligible at the state level. Okay. And one more recap: size matters in terms of the size of your firm and the Affordable Care Act. So you really have to understand, what the how many full-time employees that you have. And again, full-time employees are any employee that's working over 30 hours. This will come up a little later, but any employee that's working over 30 hours. For instance, if you have 2 employees, that one is working 15 hours, and the other is working 15 hours, you put them together, that's one full-time employee. So that's how you come up with what the full-time employee is. Okay.
Want to go to the next one?
Yeah. All right, the healthcare, the health insurance marketplace. This is the area where there's been several companies that have come in to sign up to be part of the marketplace. This is, right now, there's a lot of jockeying to get to be a part of the marketplace. There will be information starting October 1st of this year to let you know which healthcare providers will be offering what services within the marketplace. This to me looks like SBHOP, but they call it SHOP. So this is Small Business Health options program. This is the marketplace that I was talking about. This is where aggregately they're putting the firms together, their offerings together to help with competition, get the price down, pool resources, get the best in terms of those essential healthcare coverage areas. There will be, as a small business owner, you'll be able to choose which types of coverage you'd like. The very, very basic that still has the minimum coverage that you need, and there should be several different programs to choose from with different pricing so that you can come up with what pricing that you're going to go after for your firm in your area. And then you can go all the way up to higher, coverage, a more comprehensive coverage. But the programs that are in this shop area, the offerings there, you will be able to choose and fit it in with your type of employee. For instance, if you have an IT firm where most of your people are maybe of a older age, you're putting together, retired folks that are working in IT together, you may need a different type of health coverage than you would if you were working with maybe younger, folks in the IT area. So you'll be able to choose from the various coverage to find out which works best with your type of employee. Also, if you start off with maybe you're under 25 and you start to grow, you can keep this same small business health options program up to a point, as you grow. So you don't have to keep changing every year. As soon as maybe you have 25 employees and next year you have 26. The only difference would be you may not be able to get the tax credit from the federal. You still may be able to get it locally, but you will be able to stay in the same marketplace program.
So, by the way, we will make sure the links and the URLs referred in this presentation, as well as a copy of this will be available to you.
Right.
So,
and thank you, Sundar. And you should have, if you don't have, we have extras here. This handout, you will also be able to get this electronically, and it has embedded in FAQs from the IRS and from various different areas that will help you understand it a little bit more. I have not, I've just been learning about it since the beginning of this year, and one of the things that the Small Business Development Centers are going to do is go out throughout the country and help the small businesses to understand it. Have webinars, have different workshops to have you. It'll take a little while for it all to settle in, but now that I understand it a little bit better, it's I can understand where, as a small business, I could possibly use this as a tool to get the best employees that I could get, or also to help compete with other types of businesses that compete with me. Mm-hmm.
Okay. And one interesting observation. I look at the graph. This is good. I mean, 38% of the folks have already looked in details on the So you've been keeping up with what's happening out there. So this is good. So you want to go to the next slide?
Mm-hmm. Yes, please. Okay, so the third area was this employer shared responsibility area. This is the area that frightens people the most because they're really not sure what this means. Employer shared responsibility means, shared responsibility immediately means I got to pay for something. What does this mean? What do I have to pay for? And this creates probably the most angst with the small businesses that they come up.
Yes.
And this area really is looking at the small businesses that have above 50 and above full-time employees. That's where this would fall in place, at least in the beginning right now. In 2016, it will go to approximately 100 employees, but right now it's 50 or above. Okay, and as I said before, the full-time employee definition, average 30 hours or more per week, or 130 hours within a month. Mm-hmm. The full-time employee, there's the example could be a combination of several employees. The control group employers are, for instance, if you are a subsidiary or has with a company that has connections with another company, then that would be considered part of the control group. So those are important definitions. So does a
joint venture comes into that?
I'm sorry?
Joint ventures?
Yes.
Is that part of that? Mm-hmm. Okay.
Okay, with the employer shared responsibility provision, there are scenarios as to when this kicks in. First of all, if you have over 50 employees, you should really, key into where it does kick in. And where it does kick in is two things have to happen. One, either you will not going to be offering coverage to at least 95% of your full-time employees, or the coverage that you offered does not meet the minimal or affordable part of the health coverage. So there is a minimum type of or essential health areas that need to be covered, and it has to be affordable. That's one area. Or if the employer is not covering 95%. Now, and at least one full-time employee receives, the premium tax credit at the individual marketplace. So, for instance, I have 30 employees, full-time employees, and one of my employees decided they're going to get their own insurance, and they're going to take the tax credit for it. Then you need to make sure that you're covering, helping to cover the rest of your employees with the affordable and the minimum essential coverage, so that you don't get hit with the shared responsibility. And so the shared responsibility will be an assessment fee in your taxes. But if you cover the other employees with the affordable and essential health care coverage, and as an employer you can take those deductions, and not credits, they're deductions, then you will avoid the shared responsibility payment that will kick in.
So this shared responsibility payment will be assessed at the end of the year for the employers.
Right, when they go to do your taxes,
returns.
and you have to list, who do you have that you have provided insurance to, healthcare insurance, or if you have not, how many employees you have that are full-time. And what'll happen is it'll come up that there's a payment, but if you could show that you've paid, contributed to this amount, then that payment will be, it sort of goes away. And it comes up for individuals too. You will have that for individual. When you go to pay your taxes, if you show that you don't have any kind of health insurance, that assessment payment will come up too. So, yeah. Okay. And so additional key points, if you have a lot of part-time employees that, there is, it doesn't come up to that 50 or above, then, you're really not in that area. The other, if you have employees that you've offered, like say you have 50 or 52 employees, and about 40 of them are covered under their spouse, or they have their own health insurance, then you're not going to get dinged for payment, because those employees have, are already covered. So there won't be any payment owed. And then if like I said, if some of the employees are, under their spouses, that will also, not be under that. Beginning in 2015, though, and this is important, that when you do offer the coverage to your employers, the children of will also need to, not necessarily, not the spouses, but the children of will be part of that.
All right.
Okay.
Good.
And then next. I'm sorry? Well, okay, as an employer, as an employer, if you have employees that their spouse covers them, then you don't have to. Okay. Yeah.
Good.
Okay.
That's good.
And then, looking forward, one of the parts to the Affordable Care Act is this, the maximum waiting period used to be all over the place. It's going to be up to 90 days. for coverage to kick in.
Wow.
There'll be a lot of incentives for smoking cessation, weight loss, those kinds of things for the employer if they kick that in. And I believe it's some of the franchisors from Subway or some of those that are now looking into all of the different incentive reward programs for their franchisees to look into. And then for employers with more than the 50 employees, there's going to be, there will be a cutoff at between 50 and 250. After that, there will be a report that will be due in 2015. And so there will be new sort of reporting requirements starting in 2015, to talk about, for you to report the amount of coverage that your employees have. But as I said, there were two slides that most important. The first slide was the what number are you in terms of the number of employees. But this is probably your most important slide. The SBA.gov/healthcare. As a lot of this is just coming on now. All of the new information will be posted there. IRS.gov is probably easier actually to go to the SBA.gov healthcare because it'll take you to the part in IRS.gov that'll be most important for you to see. Healthcare.gov again, and then DOL, the Department of Labor, will have their healthcare reform. But if you're a small business, I would suggest going to the SBA.gov/healthcare because that will be most appropriate to what your needs are.
All right.
Okay?
Wow, that was a comprehensive
I know.
overview. With that, anyway, we are going to have a Q&A at the end of this when we finish all three topics. So before I move on to the next topic, Radel, can you switch to the next? So this is the topic. This topic is on federal mythbusters. You won't believe it. I have a personal experience around some of the advice that I got from the memos. I haven't read that before I approached some of the contracting officers. So I'm going to request Susan to talk about how is this memo, which is the Federal Mythbuster Memo 2, is different from 1, and also talk about what are the key aspects, maybe top 3 things that has been recommended in the memo. Susan.
Sure, thanks, Sundar. So essentially the differences between the first and second memo is the first one was for government employees and the second one was tips for vendors. We've gotten a lot of great feedback about these memos. We're hoping at the ground level that this is working. I'm not, maybe you guys can give me some feedback at the end about your opinions of whether it's working or not, or whether you're helping, like Sundar's saying, train the contracting officers about it. But for me, in my view, and where I sit, the 3 top ones that I think are most important are the contracting officers can meet one-on-one with vendors. We tend to be a risk-averse group and want to treat everyone fairly and are often afraid that we're going to give an advantage to one vendor over another. But during the market research phase, before the solicitation is released, Part 15 of the FAR specifically allows contracting officers to meet one-on-one with vendors, as well as draft RFPs and RFIs, industry days, all sorts of other ways for communicating with industry. So we just wanted to make sure that our folks in the field knew that this was definitely something that was okay. So they could point to that memo and say, no, I can do this, I'm allowed. The second one I thought is most important is we tend to not want to have protests. They take a lot of time, they stop the procurement from moving forward, but we don't want to make decisions based on whether or not we're going to be protested. We want to give as much information as possible. So just a couple little fun facts. In 2010, there were 2,299 protests, and 19% were sustained. So
wow.
it's pretty high. It's a pretty high number.
Yeah.
So if if you're giving more information and getting more information, and as long as you're making sure that this is a level playing field with all the folks proposing, it will, I think, reduce that number of protests. Let's see. And the other one that I thought was most interesting was that you're not allowed to give debriefs at the task order level on GSA federal supply schedules.
Wow.
This to me, I was like, that's completely silly. It's not an official debrief, but FAR Part 8 does say, give them some information, give them feedback. And as an old contracting officer boss of mine used to tell me, let me help you win your next contract or your next order. So always, always ask for more information. It'll help you in the next time, and it'll help the contracting officer and the program folks develop better requirements and better solicitations in the future.
Very good, thank you. Actually, I have a follow-on question on that, Susan. In my personal experience, I did reach out to a contract officer, and again, I won't name anything. I want to make sure that the Mythbuster memo reaches the government constituents also. Because one of the response I got from them, they say, I take care of only existing contract. If it is a new one, I'm not supposed to have a meeting or something like that. So, and that I think it would be really helpful if that memo, not only it's useful for the vendor community, but it's being propagated across the government also.
Yeah, sometimes being so large, we have a hard time getting information out to everyone.
So with that, Nancy, you have a question, quick?
No.
So in other words, conversations can occur between the time that the RFI is released and the solicitation is released.
That's correct.
So, so then, this is, a lot of people are not aware of that. So,
And a
That's
quick
why we
thing,
did
quick
the
thing.
memos.
But anyway, I think we are integrating the questions in the panel. I'm fine with that. Make sure that do you want a mic? Can you all hear Nancy's questions here?
the
Okay.
other thing that is always problematic, I raised this question at a meeting yesterday and got a kind of crappy answer. But it has to do with the role of almost all these procurements have incumbent contractors. There's very little that's new. And so the incumbent contractor has much more access to information.
Sure.
A contract, even with a well-intentioned contracting shop that provides loads of detail, the incumbent contractor always has significantly more information, significantly more insight than a non-incumbent contractor. So, I mean, what steps do you think that a CO should make in order to level the playing field in that regard?
Well, oftentimes this isn't so much the role of the COs, it is the program manager. They need to make sure that there's some sort of division and no conflict of interest going on there, so when the future requirements are developed, that incumbent contractor isn't necessarily working on the future requirement. So there has to be some kind of division of separation of labor there. But there is inherently a natural competitive advantage because they've been doing the work. And that's a challenge to get around. I imagine that the contracting officer would want to try much harder to give more information to everyone who's going to be competing in the future, just so that as much as possible, as much as makes sense. But it is challenging.
Thank you, Susan.
I'm going to take a
with
quick
that,
step
yeah,
further.
I'm going to.
I usually put it back on the contractor themselves. A lot of proposals that I've seen come through have been so wordy and wordy. I think that what should happen, and what I've seen some of the big guys do is this. What you're going to say in words, maybe try saying it, putting it in a chart or graph. It's like advertising. When an advertiser pays money or a company pays money to put money in advertising in a magazine, that goal is to have you study that advertising, not flip the page. So, and that's the same thing you want to do when you have a proposal. You want to make sure that whatever you're putting in there is eye-grabbing. So therefore, whoever's evaluating it can be engaged in your proposal. So what you're doing.
I would actually disagree with you there. Being a former contractor.
I like it. I like it. I want to tell you something.
And that's why I'm here.
Desmond, I want to tell you, this is the first time in a panel setting, you always have everybody agreeing with everybody else.
Right.
Okay.
And that's why
this is the diversity. I like
right.
it.
And that's why I'm here. I don't necessarily agree with the contracting officer route. But the thing of it is that this is what I've seen that has been successful.
Yeah, but your issue does not address mine.
No, it does not. It does not address. Right, you're right. It does not address yours. What I'm trying to give you is something that make you more competitive.
Yeah, but if you don't have information, whether it's a text or whether it's a graphic, you can't draw it because you don't have access to the information.
No, what I'm saying is that what you would say in words when you're actually writing your proposal, why don't you put it into a graph or a chart or something? So therefore, we can study the chart and make sure that you put some thought into what it is you're actually selling us.
Yeah, and what I will do is we are going to have a Q&A for sure. Maybe I'll allow another 2 more questions on this topic, and because we have, how much time we have? I'm now keeping it. We have another 10 more minutes. I think that. Okay, and can we do one thing? Can we hold this off? I'll just finish up the next 2 topics quickly and then open up the floor. Is it okay? All right. I think if you once you open up, I'm getting a flood of questions here. I'm sure I'm not being fair. I'm sorry about that, but I think the next 2 topics are pretty quickly. We can sail through that. The next one is accelerated payments. Okay, and I would like you to switch the next polling question. Can you switch the next one? So this is the new regulation, which I really love it. I really like it, and it really helps me with my. Not this one, I think, yeah, this is the one, that's the one, that's right. The current payment terms. So we have, look at the net 15, nobody is having it right now. So Susan, you want to talk about the new regulation around the payment terms?
Yeah, very quickly, OMB had this initiative to help accelerate payments to small businesses, primes, and subs. We have 2 memos out there encouraging agencies to do this under current financial management rules and regulations, which is not my area of expertise, but I am familiar with this from an acquisition perspective, allowed us to pay up to 30 days, but we could pay faster anyway. So this memo is just sort of within the boundaries of current legal payment authorities to say, let's aim for 15 days with our small businesses. And the second one said, let's, primes, can you pay your subs faster so that we can have more money in our pocket, we can use it to invest, we can use it to grow, and do all these other really good things that we need to do. So we currently have a FAR rule that is out proposed, and I encourage everyone to comment on any regulations that are out there that is asking questions about how best to implement this. And as you can imagine, at the agencies, particularly DoD, with the many, many, many different services that they have in different payment systems and financial systems, that this can be very challenging for our agencies to change the way that they do business. But they are doing it. It's slowly changing. We're going to put it in the FAR, so we have some clauses that flow down to the sub. So we're making, slowly but surely, we're making progress on this.
So there's been a follow-on question on that is, so once that becomes a law or something like that, how do you monitor, what kind of mechanism do we have to see whether the prime is really holding up to, making the net 15 payments? Because that's going to be a very quick turnaround in terms of, getting the payment issued.
Right. Usually the small business office does not get involved unless a small business calls and complains about it. So once they make us aware of it, we then get involved. We go to the contracting officer, and we also engage the program officer or the core to find out what's going on with the payment itself. And that if need be, we'll actually even call the contractor themselves and speak with them to find out why their subs have not been paid.
Oh, wonderful. So that's good.
Small business office.
Along with the contracting officer and the contracting officer's representative, they work as a team to make sure these things are all done according to the contract.
Yeah, I think the key factor is that previously if you are a sub to a prime, you didn't have to go to the contracting officer, but with this,
right,
you can approach them and on these payment terms, right? And look at the statistic. Everybody's net 30, and I think with this change, I think that's going to be really helpful for small business. So with that, I'll move on to the last topic for today's discussion. This is regarding small business contracting plan. And so can you change the polling question to the last one, please? So we are all, as a small business, we have a prime relationship with the agencies, or sometimes, or most of the time, we are sub to a prime. And we may not be performing the contract under a formal subcontracting plan. We are just up to them, right? So we wanted to figure out from regulations, there are some new upcoming changes that Susan can again elaborate a little bit on that. And then I want to also get statistics. If you look at that, 72% of them are participating or not participating in the subcontracting plan. Okay, but once you participate in that, and this new regulation that Susan is going to talk about, it's going to be actually how it's going to explain how it will be beneficial for small business. Go ahead, Simone.
So very quickly again, over the past few years, I'm sure you're aware, a lot has been happening in the small business contracting arena. And in 2010, the president established an interagency task force, which that following fall gave about 13 recommendations, and one of them specifically targeted subcontracting. Shortly thereafter, the president signed the Small Business Jobs Act, which I got to work on when I worked on the Hill, which is really kind of cool, implementing that bill. And again, there are several provisions in there that address subcontracting specifically. And just recently, the latest National Defense Authorization Act of FY13 also had more provisions addressing subcontracting. So though none of these are implemented just yet, we have implemented a lot of the Jobs Act provisions, but subcontracting specifically has not been implemented. SBA recently put out a rule in, well, I guess October 2011, recent in policy time, which addresses the issues from the Jobs Act about bait and switch, payment terms, and compliance responsibilities. So bait and switch meaning if you work on a contractor's proposal, you're a sub and you're working on that prime's proposal to the government and they don't give you work, this is what this provision will address. So it's saying you should be getting this work if you helped with the proposal, or if you have some kind of written agreement with the prime. As far as payment terms, say the prime is now going to be, when the proposed rule becomes effective, will be required to report to the contracting officer if they did not pay their sub on time or in the full amount, or on time being within 90 days or the full amount. And if they have 3 issues of these, when they haven't done that, then the contracting officer goes into the past performance system and dings them and says, you know what, you didn't pay your people on time. And the other one is, the other part of the good, interesting thing about this that was specifically addressed in the FAR is the contracting officer, it's very clear, it's clarified in there that the contracting officer is responsible for the subcontracting plan and to make sure that any of the evaluation is done of the prime for future source selections. So lots to do. I could talk about a lot more. There's a lot of things in the Jobs Act that we've already done that are really great, but I'm going to, in the interest of time.
Thank you, Susan. And this is one interesting, and I would really love it. Primes are going to be evaluated on how well they,
So look for
comply
a
with the
rewrite
subcontract.
to FAR 19.7, pretty much.
So with that, let me open up the floor for questions. And Radel, how many more minutes we have? 2 more minutes. Oh, all right. Okay. So can you actually, we can bring them. I think we can unplug it here, right? Yeah. Yeah. Go ahead.
Hello, I'm Rob Williams. I'm with Converge Networks Corporation. My question relates to some of the changes that have occurred in small business contracting over the last couple of years. 8A, woman-owned, hub-zone, were all sort of put on an equal shelf in theory.
Parity.
In some of the changes that came about. One of the unintended, I have to believe unintended, consequences of these changes, and at a policy level, I'm just hoping someone is looking at this, is that normal, ordinary, everyday small business, no preference program, not an 8A, not woman-owned, not hub-zone, just small and good, was thrown completely under the bus. Okay? And I'll say it that way, and I'm sure that people who fall in that category in this room would agree with me. Completely under the bus. What do I mean by that? You see, now, if you're just small, you're not on the same shelf as the other small business preference program guys. You're on this shelf down here with big business, except you're not big. And so big business won't give you any work. Why should they do that? It doesn't advance their small business subcontracting plan. The preference program companies won't team with you. They have the entire piece of fruit. Why do you get a slice of my fruit? You're not an 8A like me.
So what's the question?
Okay. So my question is the government aware of this? I can't believe that was the plan, but it is absolutely the effect. And we happen to be part of that 85% of all businesses, small business, not just preference program, small business. And I'm not saying that to undermine anybody who is an 8A or woman-owned. I ran a few of those companies too. But as
Thank you,
a
Robert.
regular guy,
I'll take it. Thank you.
it's a problem.
Take this first?
Who wants to fill the question? Go ahead.
I'll take this. So first of all, when we wrote our parity regulations, that was to say that HubZone did not have a preference over the other socioeconomic preference programs. It had always been existence that those had a preference above small business in general. In addition, we do have current regulations that require small business set-asides for just smalls. It is a preference below the SAT, statutorily and regulatorily, and above the SAT, it is a preference. So even if it's not required above the SAT, it is still required for contracting officers to look and make sure if there are 2 or more small businesses that can do the job, that they set it aside for small business. So I appreciate your comment, but I definitely disagree, and I'm sad to hear that that's how it's being implemented in the world.
Thank you, Susan.
The real problem is how it's being implemented.
Thank you. I think, this is a great piece of conversation. And again, the panel members will be available after the call. So have a, discussion after this panel. Okay, go ahead.
Hi, my name is Ron Okowitz. I'm going to add to the gentleman's comment in one perspective. And that perspective is the hallmarks of good acquisition are usually open and transparent and competitive. And what I'm seeing that really is adding to his woe is a tremendous surge in sole source directed contracts that are not being even synopsized, that there's market studies going on that are not being told to the public. And these are what's really hurting small business. That's the real issue. The laws are okay, they can play, but I see agencies that haven't competed existing contracts in 7 to 10 years. They just keep sole sourcing to the same people all the time. What in particular is your organization doing to really analyze that non-competitive environment?
Well, OMB particularly, as well as the president, put out a memorandum saying that competition is the gold standard. We absolutely encourage competition. We meet with our agencies regularly. We have something called an ACSTAT, where every few months, depending on every 6 months generally, we meet with our agencies and we're saying, how are you doing on your high-risk contracting, the sole source you're talking about? Are you encouraging competition? What are your barriers to competition? When you're not doing competition, why are you doing the required justifications if you're not? And so this is sort of the way we meet with the chief acquisition officers, we meet with the OSDBUs, we meet with and this is our form of getting the pulse of what agencies are doing. Again, I mean, if folks are not doing this, this needs to be brought to, doing the things that are in law and in the FAR. There's a problem, and we need to be made aware of that, and that's why we have the protest function and IGs and things like that. But I don't know specifically who you're talking about, what contracts you're talking about, but we absolutely would not approve in any way, shape, or form of doing sole sources without all the required justifications.
Thank you, Susan. And with that, we'll wrap up the panel. But the members are still available for any questions. Sorry about that. I know I'm getting signals to wrap up the session here. And I really thank you, the panel, for providing invaluable information on this. Thank you.
Thank you.